Mark Zuckerberg didn't build Facebook in his Harvard dorm just to hand it over to California politicians. Elon Musk didn't sleep on the Tesla factory floor for years just to lose control because of a tax bill. And Larry Page didn't create Google in a Menlo Park garage so the state could force him to sell it. But that's exactly what California tried to make them do. And now they're all gone. I'm financial economical historian, and if you want to understand the single biggest wealth transfer in American history, the one happening right now, in real time, that the mainstream media refuses to cover, you need to watch this video until the end. Because what I'm about to show you isn't just about rich people leaving California. It's about the systematic destruction of the innovation economy, and your state might be next. Hit subscribe right now because the tax documents I'm about to walk you through will change how you see the entire American economy. Before we get into the numbers, drop a comment right now telling me what state are you in and have you noticed businesses leaving your area? I want to see if this pattern is hitting your hometown yet because I guarantee it's coming. Now, everyone's talking about California's exodus. You've heard the narratives: high taxes, crime, homelessness, overregulation. And yes, those things matter, but they're not the nuclear weapon. The nuclear weapon is something 99% of people don't understand, and that's exactly why California keeps getting away with it. It's called voting share valuation taxation. Let me explain this in plain English, because once you understand this mechanism, everything else clicks into place. When you start a company like Google, Facebook, or Tesla, you don't just create one type of stock. You create two classes. Class A shares, what the public buys, one share equals one vote. Class B shares, what founders keep, one share equals 10 votes, sometimes 20, sometimes 50. Why? Because it lets you keep control even after going public. Larry Page owns about 12% of Google's economic value, but controls over 50% of the voting power through Class B shares. Mark Zuckerberg owns about 13% of Meta economically, but controls nearly 60% of the votes. This structure is what allowed them to make long-term bets instead of chasing quarterly profits for Wall Street. Here's where the trap closes. California doesn't just tax the market value of those Class B shares, they tax them at their theoretical control premium value. Let me give you an example with simple numbers so you understand the weapon they're using. Imagine you own a house worth $1 million, but that house comes with special keys that let you decide who lives there, when to sell, when to renovate. Those keys give you control. Now California says, we're going to tax you not on the $1 million the house is worth, but on $3 million because your control is valuable. You say, but I don't have $3 million, I just have a house. They say, then sell the house, sell your control, pay us. That is exactly what California is doing to every founder with Class B shares. Here's the actual math on Larry Page. His Class A shares, if he had them, worth $10 billion at market value. His Class B shares, taxed as if they're worth $30 billion because of the control premium. California is taxing him on $20 billion of value that only exists if he sells his control. But if he sells his control, he loses Google. It's not a tax, it's a forced sale disguised as taxation. Let me show you the actual numbers, because this isn't theory. This is happening right now. Larry Page's net worth approximately $114 billion. Most of that is Alphabet stock, not cash, stock. California's proposed wealth tax, combined with existing valuation formulas, would require him to pay roughly $2.3 billion per year, every single year. Not on income, not on realized gains, on the theoretical value of assets he hasn't sold. Larry Page does not have $2.3 billion in cash sitting around. He would have to sell stock. And because his Class B shares are taxed at the control premium, he'd have to sell a disproportionate amount to cover the bill. Within 5 years, he'd lose voting control of Google. The company he built in a garage would no longer be his. So what did he do? He bought a compound in Miami, established Florida residency, zero income tax, zero wealth tax. And he's not alone. Let me read you the list, because this is the most significant economic migration in modern American history. Larry Page, Google, to Florida. Sergey Brin, Google, to Florida. David Sachs, PayPal, Kraft Ventures, to Florida. Keith Rabow, PayPal, Founders Fund, to Florida. Drew Houston, Dropbox CEO, to Florida. Andy Fang, DoorDash co-founder, to Florida. Larry Ellison, Oracle, Nevada, Hawaii. Elon Musk, Tesla, SpaceX, to Texas. Joe Lonesdale, Palantir, to Colorado, then expanded in Texas. These aren't just rich guys buying vacation homes. These are the people who built companies that employ over 400,000 workers in California alone, and every single one of them is gone. Now, some of you are thinking, good, let the billionaires pay their fair share. I get it, I understand that instinct, but let me show you what happens when they leave. California's state budget for 2024, $311 billion. The top 1% of earners, mostly tech founders and executives, pay 42% of the state's income tax. That's $54 billion in revenue. Now, let's say just 10% of that top 1% leaves. That's $5.4 billion in lost revenue every year, forever. But it gets worse, because when the founder leaves, the company follows. Look at the pattern. Larry Ellison moved to Nevada, Oracle moved headquarters to Texas. Elon Musk moved to Texas, Tesla moved headquarters to Texas. Joe Lonesdale moved to Texas, Palantir moved to Colorado, then expanded in Texas. The founder goes, the company follows, the tax base collapses. California's budget for 2024, $68 billion. How did that happen? Because they kept spending like the rich would stay and pay forever. But the rich didn't stay. They hired accountants, looked at the math, and moved to states that don't treat success as a crime.
Here's what the politicians don't tell you. This isn't just about billionaires. When Oracle left California, they didn't just move Larry Ellison's desk, they moved thousands of jobs. Engineers making $150,000 a year, project managers making $200,000, marketing teams, sales teams, entire departments, all gone. And those people paid taxes too. They bought houses, they ate at restaurants, they sent kids to schools. When you lose the company, you lose the entire ecosystem. I want to share a story. There's a small business owner in Redwood City named Miguel. He ran a catering company servicing tech offices, Google, Facebook, Oracle, Apple, 30 employees. When Oracle left, lost 18% of revenue overnight. When Facebook and Google downsized their California offices, lost another 25%. Last month, he closed his business after 19 years. He told me, "I don't blame the billionaires for leaving. I blame the politicians who chased them out." And he's right. Let me explain the Class B share mechanism one more time, because this is critical. When California assesses the value of Class B shares, they don't just look at market price, they add a control premium. That premium is calculated as the difference between what a strategic buyer would pay for control versus what a passive investor would pay for regular shares. For Google, that control premium is estimated at roughly 200%. So California is taxing Larry Page on 3x the market value of his shares because they believe his control is worth that much. But here's the insane part. That control is only worth that much if he sells it. And if he sells it, he loses the company. So California is taxing him on value that evaporates the moment he pays the tax. It's economic insanity. And this isn't just happening to billionaires. This same logic is being applied to family businesses across the state. I spoke with a manufacturing company owner in Fresno. His name is David. His grandfather started the company in 1953, now worth about $40 million. David owns 60%, which gives him control. Under California's valuation rules, his 60% is assessed at $72 million because of the control premium. His annual tax burden under the proposed wealth tax, $900,000. The company's annual profit after reinvestment, $1.2 million. Free cash available, $300,000. He can't pay $900,000. So what are his options? Sell the company, lose control, fire employees and liquidate assets, leave California. He's leaving, moving the entire operation to Arizona. 73 jobs gone. And he's not alone.
Some people will say this is all speculation. It's not. Go to San Francisco right now. Walk down Market Street. Count the empty office buildings. According to CoStar, Commercial Real Estate Analytics, San Francisco's office vacancy rate hit 36.2% in Q3 2024. 36%. That's the highest in the nation. This isn't because of remote work, it's because the companies left. Salesforce is subletting entire floors. Meta has abandoned multiple buildings. Google paused expansion plans. The city that was the global capital of innovation is turning into a ghost town. Here's the kicker. Gavin Newsom knows this is happening. His own Department of Finance released a report in November 2024 warning that high-income tax migration is creating a structural deficit that cannot be closed without either major spending cuts or tax increases on the middle class. In other words, the billionaires left, so now the burden falls on you. The teacher making $65,000, the nurse making $80,000, the electrician making $75,000. You're going to pay for the programs designed to soak the rich because the rich are gone. California is not unique. New York is trying to pass a similar wealth tax. New Jersey is considering it. Massachusetts already passed a millionaire's tax. Every blue state is watching California to see if they can get away with it. If California succeeds in extracting wealth from people who've already left, every state will copy the model. If California fails, if the exodus turns into economic collapse, it will be a warning. Don't chase your tax base away. But here's the thing. It's already too late for California. The damage is done. The billionaires are gone. The companies are leaving. The middle class is getting crushed, and the politicians are still pretending this is sustainable. Gavin Newsom went on TV last month and said California is still the 5th largest economy in the world. That's true for now, but it was the 4th largest 2 years ago. It's falling fast. California's GDP in 2023, $3.9 trillion. Texas GDP in 2023, $2.4 trillion. But Texas is growing at 3.1% annually. California is growing at 1.2%. At that rate, Texas will surpass California in GDP by 2035, and that's assuming California doesn't shrink, which it might. Because when you lose your top earners, your most innovative companies, and your entire venture capital ecosystem, growth doesn't just slow, it reverses.
The California exodus isn't about politics. It's not about red versus blue. It's about math. If you tax people on money they don't have, they leave. If you treat control as cash, you force founders to sell. If you punish success, you get less of it. This is not complicated. A high school economics student could predict this outcome, but the politicians in Sacramento either don't understand it or they don't care. So what happens now? Silicon Valley dies. Not slowly, not gradually. It's already happening. Venture capital firms are opening offices in Austin and Miami. Startups are incorporating in Delaware and headquartering in Texas. Engineers are taking jobs in Nashville and Phoenix. The entire ecosystem that took 70 years to build is disintegrating in less than 5. And the people who will suffer most aren't the billionaires. They'll be fine. They have planes, accountants, lawyers. The people who suffer are the workers, the small business owners, the families who bought houses assuming California would always be the land of opportunity. I want to read you something. This is from a letter Andy Fang, DoorDash co-founder, sent to the California Franchise Tax Board in September 2024. I built DoorDash to serve communities. I employed thousands of Californians. I paid hundreds of millions in taxes. And now you're asking me to pay taxes on assets I cannot liquidate without losing the company I built. This is not tax policy. This is confiscation. I'm leaving, not because I want to, but because staying is mathematically impossible. That letter is public record. You can read it yourself. Staying is mathematically impossible. That's the most honest assessment of California's tax policy I've ever seen.
So here's my question for you, and I want you to answer honestly in the comments. If you built a company from nothing, if you worked 100-hour weeks for 20 years, if you created thousands of jobs and paid billions in taxes, and then the government said, we're going to tax you on money you don't have until you lose control of everything you built, would you stay or would you leave? Be honest, because I think most of you would leave. I think anyone with a basic understanding of math would leave. And that's the tragedy. California didn't lose these billionaires because they're greedy. California lost them because the politicians are economically illiterate. Silicon Valley is dead. The Texas era has begun. And if you want to see which company leaves next, which founder flees next, which billion-dollar headquarters closes next, subscribe to this channel right now, because I'm going to follow every single move, every bankruptcy, every closed office, every lost job. This is the biggest economic story of our generation, and the mainstream media won't cover it because it destroys their narrative. I'm financial economical historian, and this is where the numbers matter more than the politics. Subscribe, comment your state below, and share this with everyone who needs to understand what's really happening to the American economy. And if you want to see the next state that's about to copy California's playbook and which billionaires are planning their exit right now, watch this video next. The exodus is just getting started.